Hello everyone, welcome to Smart Investing. So today's video is going to be about three bank stocks. We're going to go over them real quick. Today is November 5th, 2023. I barely got enough sleep. It was because of the hour change and woke up in the middle of the night. Daughter was wanting to sleep next to me. And also, I'm fine for now. Is what I'm saying is that if I make too many mistakes, then I apologize in advance. So anyhow, these are the three stocks that we have for today. We have ticker symbol OZK, WBS, and CUBI. So first one up, OZK. We're gonna analyze this stock. So we have here at $39.94. Again, markets are closed. Today is Sunday. So we're going to go over as much as we can. Looking at the first page, like always, we have here very active stock, market cap, and volume. What else can I say about this stock just by looking at the numbers? They do pay a dividend. Dividend yields at 3.7. Earnings are not too bad at 5.72 compared to other companies, and they are undervalued from what I'm seeing. Moving on to the chart. 5-year chart. So they are above the 2020 highs, and they're still holding up. So that's actually a good thing. And again, you have a difference of, let's say 2020 highs were like around, I don't know, 27, round that off. And then low in 2023, the lowest in 2023 was around 30 bucks. So it's been holding up fairly nicely. 52-week high and 52-week low. Forgot to mention that, but here it is. So that's a difference of about 20 bucks. So that's actually pretty good. Moving on to the analysis for the quants. I don't know if you guys wanted to see that, but 9 analysts rated this 67% hold. That's the majority vote. And 33% buy. Excuse me. Whoops. Try to turn the page. So quant ratings. Highest rating is quality. So that's strange to see. And lowest rating was 4.35 for momentum. Overall rating is a 5 out of 5. So this stock must be pretty good. I haven't seen decent numbers like this in a while, especially for a bank stock. So the company itself seems pretty good if they're getting ratings like that. Again, I can only go off of what I see. The value I can agree with. The growth, I don't know because I have to look at the balance sheets and all that. The income, comparing to other stocks, I don't know why they rate it. I don't know how they give their ratings. I don't know if they do it just based off the company and the balance sheet and the overall statements, or if they compare it to the sector, the overall sector, in the financials, because you not only do you have bank stocks, but I mean non-bank stocks. When it comes to financials, there's a wide variety of investments when it comes to that. But if they only strictly, limiting the category just to banks, then that's totally different. So, I mean, there's different ways how to rate things. So, like I said, I would take it as an overall looking at the statements. So, a 6.18, it's actually not bad. So, the quality, I'm undecided because I don't know yet. I'm not a customer. I'll have to look into that as to more details when it comes to the finances. And then momentum is pretty low, which I think is wrong because it has high volume for a stock like that. So we're gonna look at the financials we have here. Their earnings, it looks like they have beaten Q4, Q1, Q3. Sorry, Q2. Q3, I don't have anything. Maybe, I don't know if they did report yet. They must have reported, but it hasn't been listed yet. Because I have the next date here for the earnings will be in January, late January. So I just don't have the numbers in front of me. Annual numbers I do have. So ROA, ROE. Let's look at any major changes. Everything looks pretty steady. The net margins are a little bit off. So we went from 52% to about 45. Debt to asset is about 83%. That's still pretty high. Income statement, we went from 579 to 564. Then income statement, there it is. So this is what I'm looking at. And then I'm just comparing this number and this number. It's not a big drop, so it's not too bad. Their revenue has gone up, so that's good. Balance sheet, we have at 83% for liabilities. Sorry, debt to asset, and 22, close to 23 billion liabilities, and then I have 27.66 billion for the assets. Cash flow, this is the most important. So are they positive or negative, and by how much? And let's see if the net income can support that, and any kind of emergency funds or anything that can support it. So we have here operating at 764. So again, I'm taking the annual numbers for 2022. So 764, then we have 2.43 billion, 645 million. So they had, I don't feel like doing the math, but 764, 645, so 7, 8, 9, 10, 11, 12, 13, so 13, 14, so 1.4, around 1.4 billion in negative cash flow. So that's what I came up with just off the top of my head. So negative 1.4 billion in negative cash flow, which is really, really bad. No need to even look at the dividend history if it's like that. So for this stock, just because of the negative cash flow, I'm going to say no. This stock definitely had potential, but just because of the negative cash flow, again, I'm saying no to watch list it. 2024 is right around the corner. Hopefully they do better next year. But again, they just need to make some slight changes. They really need to get on board with getting positive numbers in their cash flow, because it just doesn't look good. Again, hopefully they just do better. Next up, WBS. We have Webster Financial. Webster Financial at $41.30. Looking at the first page, market cap is at $7 billion. Very respectable. Wall Street likes to see that. Very active stock at 1.33 million. 52-week high and low comparison is at least $10. Yes, it is. That checks out. Dividend yield at 3.87. Dividend payment at 1.6. Earnings per share at 5.3. Definitely that covers the dividend. So with that said, is this actually a good number? That's actually not bad. That checks out. PE ratio is 7.86. You could round it off to an 8. Very undervalued. So cheap stock is what I'm seeing. And we're going to move on to the chart. 5-year chart, comparing the 2020 highs at $44. And it is at around, right now, 41. Now, if we look at this chart, it has some movement on it. It has gained a good, I don't know, high of about 58. But again, it's still pretty flat if you look at it for the most part. You have here, ever since, I don't know, late December in 2020, that's when it evened out. You can see that line here that I'm moving around. And then ever since 2021, it's gained a little bit, then it's dropped, it's gained, then it's dropped a little bit. Moving into, you see July 2022, goes up again, then it drops, goes up again. But we have here in June, well, more or less around May. Mid-May, we have a low of the year at about $32, and then it's moved up drastically to 45, but then it dropped down again. So that only goes to show it's pretty much in range of the 2020 high. So not much going on there on the technical side. We're going to skip to the quants and look at that. 14 analysts, and pretty much I don't know why they have so many. Again, if you look at my videos, you don't even have to click on them. I've been doing the banking sector for at least the last 2 years, even before the banking crisis happened. So again, I don't trust these analyst ratings. I do a full research, and you can see in my previous videos and in my shorter videos as well. So they rated this pretty high. We're going to add up the buy ratings. So that gives us a rating of 71% buy. That's pretty strong. And then for the quant ratings, we have here overall rating of 4 out of 5. And then lowest rating out of the quants is a 5 for income. Highest rating was growth for WBS. And I wonder why. Let's see if we can click on some growth. So this is how they rate the growth. The price to earnings year to year, earnings growth, and then the revenue growth. That's how they rate their growth. So this is for the stock individually. So they have a growth rating for very strong, 5 out of 5. I don't really know if I can agree with this or not. Because again, I don't pay attention to the banking sector. I don't really like the banking sector, but I go over it just to keep up with the stock market. So again, I cannot say if this stock is growing. I don't really buy into stocks, growth stocks that are considered bank stocks. I just don't see that happening. I just don't see it with the numbers that are presented to me. So I think I would have to say no to this. Value, I'm iffy about it since the chart is broken flat. I think this is a little bit lower, this number, and that's a little too high to give it a 7. I rated like, I don't know, between a 5 and a 6. Borderline about it. Income, I don't even care about the income from a bank stock. There's better income from other stocks, and we'll go over that as the days go by, weeks go by, months go by, and the years go by. Quality. This is something to look into, so I'm unsure about. So that's always a not available to me. Unless otherwise. What I mean by that is typically banks are run all the same. You know, they just make a percentage on their deposits, and then they invest your money, and then also giving out loans and percentages through that. So it's hard for them to gain money. The banking sector is a very tough business, very very tough. It's very very slow in growing, very very slow to gain substantial cash flow. So moving on to the company financials, we're gonna look through that now. So the info that I have, it looks like a miss in Q4 of last year, a miss in Q1 of this year, and a beat in Q2 and a beat in Q3. Very low estimate for Wall Street for Q4 in 2023. And we're going to look at now the annual indicators and results here for this stock. I'm looking for any inconsistencies, major, or something that looks really drastic. Looking by the numbers, it doesn't look too bad. The margins are sticking out to me. That's like, I'm iffy about it. That's almost a 10% drop. Debt to asset, 88%, pretty typical. So we have the net income at 644. They grew from 2021 and from 2020, so that's pretty good. So we went from there to almost double, and then pretty much at least 30% from 2021 going into 2022. So that's a good sign. Hats off to them. Definitely grew their revenue. Stayed flat those 4 years from 2018 to 2021, and then 2022, it just pretty much doubled. So something tells me that they changed their business model, or within that time frame from 2021 to 2022, something major happened. I wouldn't be surprised if maybe they sold off a part of their business. Maybe they acquired new talent or better employees. Maybe they acquired new board of directors or better decision making somehow, some way. That really pretty much covers why they did better. They made a really drastic decision that turned their business model into twice the profit, as we can clearly see here. Now, looking at the cash flow, are they positive cash flow in 2022? So we have here a 1.34, 7 billion negative in cash flow in 2022. So they would have to at least have at least 6 billion. So 6.23. So that would give them 7.5. Let me look at this part. So they are positive cash flow. So that's actually not bad. Now, would I add this to the watch list? Yeah, why not? They have positive cash flow. You can put them on a watch list if you do like the banking sector. Me personally, I would say no because I don't like the banking sector. But that would be on my end. But as a gift to you guys, I'm saying if you do like bank stocks, then go ahead, so be it. You can add it to the watch list. They seem okay. I wouldn't seem like the best, but they seem okay. They seem stable. That'll be my take on it, given the numbers presented for me. Last but not least, ticker symbol CUBI. You can call it QB. Also known as Customers Bancorp Inc. We have here a market cap of about 1.4 billion, a volume of 800,000, pretty active. 52-week high and low, difference of at least $10. Do I see there? Yes. They are not paying a dividend. Earnings are 6.3. So if they're not paying a dividend, I would say that this company's trying to grow their revenue and their net income. Moving on to, wait, sorry about that. So earnings were 6.3. PE ratio undervalued. Then what else can we have here? I think that's about it. I'm going to move on to the next. We have here the chart here. Then we have basic charting, the 200 exponential moving average at 31 bucks. So 2020 highs, we're at around 20, I don't know, 25. Shot up to around double, close to that, around 71. Then dropped back down in 2023 of about in April of about 20 bucks, and then it shot back up. And that was the whole banking fiasco around that time. The whole banking crisis happened at that time. And then it shot up again around to 41, dropped down, and now it's starting to shoot up again to around 42. So with that low in 2023 for this year in April, that brought it down to the highs of 2020. So it's kind of hard to say if they will stay in the same range, but Wall Street seems to like it. If this chart has explosive momentum going to the upside here within those months there. Now, it is above its 200 EMA. So you see right here, the 200 EMA, it bounced right off of that. So as long as we're up that, it's still bullish. For me to turn bearish again, it would have to be under the 200 EMA. And if you want to take a closer look at that, you can really see here and dig into my technicals. So as of right now, I'm seeing at around, the number says it here. The number says it there at 32 bucks pretty much. So that's the number you want to keep your eye on. Moving on to the analysis part. So like I said, Wall Street seems to like it. I would have guessed at least around a majority vote of 60% of a buy or a strong buy in total. So we have here 77%. These prices are inaccurate. I don't really look at them because that can change day to day. Quant rating, they didn't give it anything for income, so that is correct. Growth, I would highly disagree with this since they don't have dividend income. It's typically known for a bank to pay dividends, to at least distribute some kind of incentive for shareholders to invest in it. So I disagree with this number. Value, I'd say yes, I would agree with that number. Quality, again, I'm not sure, so not available. And then momentum, again, that can change day to day, week to week, so I'm not too sure about that one. But the stock seems active at around 800,000. Overall rating, they gave this a 3 out of 5, and the actual number, they rated this a 6. So could use some work, and we're going to dig into the fundamentals here. Now, looking at the company, we have here the financials here. So it looks like a miss in Q4, a beat, a slight miss, and then a big beat. So now we are looking into the annual results here. This is a pretty big drop. So that went from at least close to 10%. Close to 10%. Also, their earnings have dropped. So that looks like it makes sense. Right there. A slight drop from their net margins. Their debt is at 93%. Really, really high. Net income at 228 million. revenue at 655. So definitely that does not look good. That does not look good. The numbers seem really good percentage wise, but actual number, I don't know what to say. It's just that debt. I'm not comfortable with that debt. So here we go. The main factor for the banks, which is the cash flow, negative 20 million. Then we have negative 1.3 billion. So their financing has to be more than 1.4, and it's 1.26. So they have negative cash flow, and that is definitely not a good sign. They just need a little bit more work. So cash flow is negative. So I'm going to say no to the watch list on this one. Ticker symbol CUBI, so no. Want to see if they are a bank. So they do fall under the bank. It's just strange to see them not pay a dividend. I just wanted to double check. So they are under the banking and banking services sector. So there you have it. Thank you guys for watching. Going for a quick overview real quick. So I said no to Ozark. They just need a little bit more work. Yes to WBS to add it to the watch list. And I said no to CUBI. So again, thank you guys for watching. I'll see you guys real soon. I'm going to make a short video after this. And I have a few more bank stocks for you guys. And again, my predictions for 2024. There's going to be another banking crisis looking at these numbers and still going over these stocks. So overall, that would be my opinion from my perspective. Again, I can only speak for myself. In no way, shape, or form, I'm not a licensed financial advisor, so don't quote me on it. This is for educational purposes, and I'm not licensed or insured, so please take into consideration your own decision for a final decision. So again, thank you guys for watching, and I'll see you guys again.